everybody. This is Alan Ellman, the Blue Collar Investor, and welcome to this BCI podcast number 112, titled Using Covered Call Options and Stock Dividends in Low Interest Rate Environments. We're going to be using real-life examples with 5 Dow 30 stocks. Now, we're going to take you back to the market environment in May of 2020 during the height of the COVID-19 crisis. At that point in time, the market was in turmoil, and particularly the stock market in March had dropped more than 30%. Now, the 10-year Treasury yield was 0.65%. So there was really no money to be made in treasuries. As a matter of fact, many international banks had negative interest rates. Literally, people had to pay to put their money in the bank. Now, the dividend yield, however, on the Dow 30 and S&P 500 stocks that generated dividends were actually triple that of the 10-year Treasury. So the stock market became quite appealing. In essence, there was no other game in town. Now, this created an opportunity for us to create a 3-income covered call writing / dividend yield blue chip investment strategy, focusing in on the Dow 30 stocks. Here's the proposed 3-income strategy. We're going to buy a portfolio of the best performing Dow 30 stocks at that point in time. We're going to be looking at near-term and longer-term price performance of the Dow 30 stocks and select the best of the best. Once we have those selected and purchased, we can then sell out of the money covered call options. That gives us the opportunity for 2 more income streams outside of the dividends. And that is from the option premium and from share appreciation from current market value up to the out of the money strike price. Of course, capturing the corporate dividends is an integral part of the strategy as well. And then, of course, once we enter our trade, we move right into position management mode. So how do we select the best performing Dow 30 stocks each month? Well, we have a report that we provide to our members. We call it the Blue Chip Report. Basically, we evaluate all of the Dow 30 stocks and select the ones that have outperformed the S&P 500 in 2 time frames, a 1-month time frame and a 3-month time frame. For those of you who are actually watching this podcast, the red arrows show the price performance of the S&P 500 in the past 1 month, which was 2.68%, and in the past 3 months, which is 4.91%. So we're going to look for securities within the Dow 30 that have outperformed the S&P 500 in both of those time frames. Now, after doing an analysis of the Dow 30 stocks, and once again, we provide these reports to our premium members, the following 5 securities were eligible, and that is Apple, Home Depot, Intel, Johnson & Johnson, and Microsoft. So what we did was we put the price of the stock when we purchased them into the blue cells of the multiple tab of the BCI covered call writing calculators, along with the strike price, all out of the money, and then the option premium. The expiration date was 1 month out. So as an example, let's look at Microsoft. It was trading at 180.61, and we sold the 185 out of the money strike for $4.85. That resulted in a 1-month return of 2.7%, with the possibility of another 2.4% if the price of the stock does in fact move from current market value 180.61 up to the out of the money 185 strike. So there is a 5.1% possible 1-month return, not even counting the dividend that's generated by Microsoft. But the average 1-month return on these 5 securities was 2.3%. And the average upside potential from current market value up to the out of the money strike averaged 3.5%. So the average for the portfolio was 2.3 plus 3.5, 5.8% max return. Now, we all know it's not an ideal world, so to achieve that would be unlikely, but it just gives you the framework and structuring of how the portfolio works. And all these companies do offer a dividend, and that's not included in the 2-3 or the 3-5. Now, if we were to take a look at important dates, first of all, we have ex-dividend dates, which is the date when early exercise can occur. Even though it's extremely, extremely rare, sometimes a retail investor will exercise an option the day prior to the X date to capture the dividend. And by definition, an X date is the date you must own the shares in order to be eligible to capture that dividend. So how do we know when the ex-dividend dates are? Well, a reliable and free website that we use for our members is dividendinvestor.com. A second important date is the earnings report date, because we want to avoid earnings reports. They could really wipe out all of our premium income and dividend income if there's a disappointing earnings report. So we want to circumnavigate around earnings report date. We should never have an option in place that expires after an earnings report date in a contract month. What we can do is wait for the report to pass and then write the covered call. So how do we know when these earnings reports come out? A very good, free, reliable resource is earningswhispers.com. So let's summarize. In a low interest rate environment, especially when the interest rates are extremely low as they were in 2020 regarding the COVID crisis, a 3-income stream strategy using blue chip or Dow 30 stocks, out of the money call options, and dividend capture can create a strategy that will really be very, let's say, impressive compared to the rates you're getting with treasuries. 10-year treasury, 0.65. So it can become very impressive when you start taking a look at this 3-income stream. Now, as always, the 3 required skills are essential for achieving the highest returns, and those are stock selection, option selection, and position management. That's something beyond the scope of this particular podcast. Before I go, let me mention our best and most comprehensive educational product. We call it the BCI Package, which is the acronym for Best and Most Comprehensive Investment Package. And what it consists of are 6 online video courses with downloadable workbooks, 6 calculators created and developed by the blue-collar investor, so you could find these nowhere else, and 5 of our best-selling books in ebook format, along with our premium membership, which is 13 months of membership. Now, the premium membership, in addition to all of the reports, includes a huge educational component, including our ongoing and never-ending video training, which involves our Ask Alan video library, Blue Hour webinar series, and we add 1 additional training video each month. Some months we add 2. How do you get information on this? Just go to our website, www.thebluecollarinvestor.com. Right on the top, just click on the link that says BCI Package, and there is information as well as an explanatory video available for you to have a look at. Ladies and gentlemen, thank you so much for taking the time to listen to this BCI podcast 112, using covered call options and stock dividends in low interest rate environments. I hope you enjoyed it. And most importantly, I hope it puts some cash in your pockets. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.